This is Amit Pabari, founder and managing director of CR Forex. In the coming week, there are two important events. First one is US ka Fed ka meeting. Second is Union Budget of India. Let us start and understand what will be the impact of Fed meeting in our market. So in 2024, Fed is going to do 8 meetings in the year. Why 2024 is an important year as far as Fed meeting is concerned? Because in 2024, Fed is going to start cutting their interest rate. Now, the first meeting is on 31st of January. The entire market is expecting that in the month of January, Fed is not going to do any rate cut. But the important point to watch in the meeting is what kind of statement they are giving for future rate cut. Currently, market is expecting that Fed is going to do 4 rate cuts to the tune of 100 basis points से लेके 125 basis point का वो rate cut करेंगे पूरे साल पे. At CR Forex, we are expecting that Fed is going to do rate cut on an aggressive basis. Let us understand why. First important reason is why they will do aggressive rate cut is that inflation is under control. अभी Fed का इन्फ्लेशन को मेजर करने के लिए एक इम्पॉर्टेंट टूल है जिसको कहते हैं PCE डिफ्लेटर. नाउ ऑन अ 6 month basis the PCE डिफ्लेटर केम एट 1.9%. फेड का इन्फ्लेशन का टारगेट कितना है 2%. सो नाउ इट हैज कम बिलो 2%. दैट इज एन इंडिकेशन दैट फेड कैन गो एग्रेसिवली on a rate cut. And if you see another data point, one private body in US gives the data point that is also showing that their inflation is below 2%. The second data point, what we refer to while discussing about how US economy is doing, that indicator name is leading economic index indicator. By the word leading, we can understand that it is going to predict the economic activity in advance. And if you see the graph, leading economic index has been falling from last 22 months. It is showing that things are not that great in US as far as manufacturing sector is concerned and overall economic activity is concerned. So if you have to conclude economic data point and plus और एक expect आएगा market के अंदर पे that US is going to go for an election in the year 2024. General perception ऐसा होता है कि when an economy is going for an election, they will try to keep the sentiments positive. Because of that also we expect that Fed will be aggressive in cutting the interest rate. If that happens, then dollar index is going to face a very huge resistance between 104.50 to 105.50, and gradually in the year 2024 we expect dollar index to move below 100 level. If that happens, it is positive for all emerging market currencies. Now let us move to the second event of the week, which is called Union Budget. Now technically speaking, this is an interim budget, so we do not expect much volatility because of the budget, but there are 2 points which we have to observe. If you see the data point from last 10 years, we have seen that government has maintained fiscal prudence. Except the year, COVID year, always they have been able to maintain the fiscal prudence. And in the current year, in last 8 months, they have only spent close to 51% of the total budget what they have allocated. That is also positive. So technically speaking, when the government is spending lesser than what they have planned, it is a good for the currency. Second aspect in the budget, what we have to understand is what kind of announcement they make for foreign direct investment and equity investment in country. As it is an interim budget, we do not expect any bigger news on the budget front. Technically speaking, we can say that budget can be non-event. Now let us discuss outlook for Rupee. The broader and the bigger view of the pair remains the same, that it is going to face very tough resistance near 83.50, and gradually the pair is going to move towards 82.5 and 82 kind of a level. Based on the bigger picture, we have to frame shorter term views and strategy for our exposure. Let us discuss that. For thin margin exporters, most of them are taking costing near 83 kind of a level. We will suggest them that between 83.15 to 83.30 they should hedge 100% on a back-to-back basis. If someone wants to wait, they should keep a strict stop loss of 83 or costing whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporters or engineering exporters. We will suggest them that between 83.15 to 83.40 kind of a level, they can maintain a hedge ratio of 85% if they are booking against confirm order. If they are hedging against anticipation of order for the entire turnover, they can keep a hedge ratio of 65%. Now let us discuss strategy for importers. As the bigger view is that the currency is going to appreciate, so we are advising importers that they should hedge only near-term imports. Between 80 to 90, so like 83, they can hedge 50% of their import payables which are due for next 15 to 20 days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.